Hello friends, welcome back to my channel. So in this video I'll be actually considering one company that actually announced good results for Q4 of Fy22. So the company name is Panama Petrochem Ltd. So it actually closed at around 309 on 7th June, and on it actually closed trading at around 304 levels on 8th June. So its market cap is 1870 crores. It's a high and low price 360 and 206. Its price earning multiple is around 8, and the book value is 127. Dividend is 0.62%. Return on capital is 41%. Return on equity is 34%. Face value is 2. So regarding this company, Panama Petrochem Ltd is actually engaged in the business of manufacturing, exporting various kinds of petroleum specialities. So the products manufactured by the company includes white oils, petroleum jelly, transformer oil, inks and coating oils, rubber process oil, knitting oils and anti-static coning oils, industrial oils and lubricants and drilling fluids. The company manufactures over 80 variants of oils used for different industries like ink and resins, textiles, rubber, cosmetics, pharmaceutical, power generation, cables, etc. They are actually in league with giants of each industry. They are in collaboration with Lifco in Germany for distribution of their specialized products. They also furnish various generation boards and atomic research centers with their required products like transformer oils. And regarding their revenue split, in FY21, Pan Oil actually contributed around 96% of their revenue as compared to 97% in the FY18, and Wax and others contributed around 4% of the revenue in FY21 as compared to 3% in FY18. For Q1 of FY22, the product price breakup is as follows: cosmetics and pharma around 24%, rubber process oil 21%, knitting and anti-static coning oils 19%, transformer oil constitutes 7% of the revenue, and others constitute 9% of the revenue. In the latest earnings call of Q4 of Fy22, the company expects revenues to grow 15 to 20% in Fy23. They expect demand from the Indian market to be stable. And regarding their geography split, Indian market, domestic market actually constitutes 54% of the revenue in Fy21 as compared to 50% in FY18. And exports actually contribute 46% of the revenue in FY21 as compared to 50% in FY18. And regarding their geographical reach, the company exports product to more than 70 countries across the world, like USA, many countries in Latin America, Europe, Middle East, many countries in Europe, Middle East, South African subcontinent, Southeast Asia, and Australia. They export a variety of products like petroleum jelly, liquid paraffin, transformer oils, and rubber process oil, different countries like USA, UK, Europe, Middle East countries, Australia, African subcontinent, Southeast Asia, etc. Good infrastructure for the company and the state-of-the-art research and development help them to simultaneously cater to both domestic and international markets. And regarding the revenue contribution, the top 5 actually contribute around 25 to 30% of their total revenue in FY21. And they actually also have subsidiary that actually operates in West Asia. They actually operate through their wholly owned subsidiary, that is Pan Oil Industries RMC, located in Ras Al Khaimah in UAE. Regarding the manufacturing facilities, company has 4 manufacturing facilities in India: one in Ankleshwar, Gujarat, one in Daman, Union Territory, one Talaja, Raigad, Maharashtra, one in Dahej, Bharuch district, Gujarat. It also has a manufacturing facility in Ras Al Khaimah, UAE, that manufactures petroleum specialty products to cater to the Gulf countries and MENA regions. As on November of last year, the company has a total installed capacity of 2.6 lakh metric tons per annum, which is 20,000 tons per annum in FY22. It is also working on 100% capacity utilization. The company is in the field of petroleum specialty oils and solvents for more than 25 years. Its main plant in Ankleshwar is one of the best in kinds in terms of huge production capacity with large storage tanks and warehouses. Some of the extreme clients of the company include large international FMCG companies like Dabur America and reputed companies in the textile, ink and tire sectors. And the research and development unit is in Ankleshwar. It introduces products which are clean and environment friendly, especially in the rubber process segments. And they actually plan to introduce new products. The company announced 4 new products in the pipeline in Q1 FY22. There is aroma-free display for ink and coating industry, aromatic-free solvent for paint industry, biodegradable oils for drilling and oil exploration, aromatic-free and non-carcinogenic new generation oil for rubber industry, etc. And they also plan to expand their capacity, and they plan to expand the capacity to 3.5 lakh metric tons per annum through a capex of 100 crores, which will be funded through the internal accruals. The same will be contributing revenue by FY23. It also plans to expand the capacity by 50% the Pan Oil UAE. And in the latest earnings call of the FY22, they actually told that the earnings expansion plans of the company are on track. The company's goal is to increase the contribution from the value-added products to 90 to 95% in the future. It also plans to increase in geographic presence from 70 countries to 100 countries in the future. Side of the company, we can actually see that in the Panama Petrochem, we can actually see the different products of the company that include white oil, liquid paraffin oil, petroleum jelly, transformer oil, inks and coating oils, rubber process oil, textile industry oils, and industry oils and greases, automotive oils and drilling fluids and waxes. So white oil, paraffin oil, you can actually go through the details, the specification of each of these oils and the applications where each of these oils are actually used is specified in the website. Petroleum jelly, transformer oils. Transformer is actually consumed by transformer companies, and power generation boards actually buy from this company. Inks and coating oil actually used to the ink industries. Inks, resin and paint industries consume these oils. And rubber process oil actually used in the tire companies. Tire companies actually consume these oils. And textile, they actually manufacture separate oils for used in the textile machinery also. Textile oils they actually manufacture. And they also manufacture industrial oils and greases. So company recently announced results for Q4 of Fy22. The results were good. So it posted a total quarterly sales of around 508 crores and the operating profit 69 crores and the net profit of around 56 crores on EPS of 9.29. So the previous quarter the total sales was 509 crores and the operating profit is 68 crores and the net profit 54 crores. So it's almost similar to the last quarter. The results for current quarter is almost similar to last quarter. If you see the same period last year, its total sales was around 542 crores, operating profit was around 81 crores and the net profit was around 60 crores. So it is almost similar. Sales and profits have been reported last year also. So the results are quite good for the last 3-4 quarters. Regarding the yearly results of this company, it posted a total sales of around 2132 crores for the full year, and the operating profit of 296 crores, and the net profit of 230 crores for an EPS of 38.08. So that is actually, if you compare the last year, it was total sales was 1447 crores and operating profit 190 crores, and the net profit was 135 crores. So there is almost around 700 crores increase in sales and around 100 crores increase in operating profit and around 100 crores increase in net profit for the company for the current year. So the EPS for the current year is around 38.08 and the stock is trading in just around 13.08. So it is trading at just 8 times Fy22 EPS. So a company that has actually grown around 50% in profits. So the company is actually available at below 8 times is very attractive for long-term investments. And if you see the performance of this company over the years, sales improved from 834 crores in 2017 to 1269 crores in 2019, further to 1447 crores last year, to the current level of 2132 crores. The net profit has improved from around 44 crores to 230 crores. 44 crores in 2007 to 52 crores in 2019. It had a dip in Fy20 possibly due to COVID pandemic. It sharply increased to 135 crores last year, and now it's actually 230 crores. So there is a almost 6 times increase in net profit from 2017. So the company is actually growing both profits and revenues over the years, and it's actually even then it is actually it trades at very attractive valuations. It's a regular dividend paying company. Dividend percent for Fy20 is around 16%. And regarding the balance sheet also, if you see the balance sheet also is actually having share capital of 12 crores and the resources of 756 crores, and its borrowings are just 30 crores. So it is purely debt free, and the balance sheet resources have increased over the years, and the debt has also reduced from 160 crores in 2009 is just increased to just borrowings are just 30 crores. So it can easily declare a bonus issue in the ratio 1:1 in the future. In the past, it had declared a 1:2 bonus in 2018. It can declare, it is a shareholder friendly company, it can declare a bonus in future also. And regarding the shareholding pattern, promoter holds 71% is also positive. From mutual fund holding FIA holding has increased to 3.8% currently from 1.82 in 2021. So it is 3.82% currently. And the one negative is the domestic mutual funds have not started investing. So in future maybe they will start investing also. And regarding the other parameters like profit sales growth for the 10 years is 14%, in 5 years 21%. Profit growth for 10 years is 22%, and 5 years is a whopping 40%. So these ratios are very good. And CAGR return for 10 years is 30%, and the 5 years is 24%, and then return on equity for 10 years is 17%, and the 5 years is 22%. Regarding the share price movement of this company, the share was actually trading at around just 101 levels in July 2019, and it fell to as low as 35 levels in June 2020 on account of COVID pandemic. and it was a very good level for investment in the company. From there, it actually touched around 300 levels. So it was around 120 levels in February when the market recovered, and 270 levels in August 2021, and now it is around 340. After touching 340 in May 2020, it's corrected to around 308 levels. So even after the sharp price, it has over given 500% returns in the last 2 years, from 35 levels to 300 levels, but still it is trades at just 8 times FY20 EPS for a company that is actually having a large number of clients and a large number of lubricant products, petrochemical products. So with a large base and expansion plans and exporting to 70 countries and planning to export to 100 countries in future looks bright. I am actually very bullish on this company for long term. I am actually expecting a target of 400 to 450 in the next 2 to 3 years in this company minimum, and I am actually expecting the company might post an EPS of 45 to 50 with a profit of over 200 300 to 350 crores.